Construction, page number 5.19 of your textbook, problem number 6. Page number 5.19, problem number 6. Page number 5.19, problem number 6. Somehow accounts topics are getting over very quickly, I don't know why. Now you are a well-oiled machine which is working very smoothly now. In casting it was a new machine, parts were very, we can say, rough, and the parts were not moving smoothly. Now it is a well-lubricated machine, hence the engine is working very efficiently now. Going on? No. Page number 5.19. What doubt you have, Santosh? Tell me. What doubt you have? You have a doubt about something? Very good. You should not have. Page number 5.19. Problem number 6. Repair is in the hand. Repair Limited. That means already the name company is itself named as Repair. Repair Limited. So we have to repair this company now. Repair Limited is in the hands of a receiver for debenture holders who hold the charge on all assets except uncalled capital. The debenture holders have literally charge on all assets except uncalled capital. Normally they might have a floating charge. Yes, no? Floating charge is normally created on not a specific asset, on all the property of the company. There is no rule that floating charge should be created only on current assets. There is no rule that fixed charge has to be created only on fixed assets. They can be created on any type of an asset. The following statement shows the position as regards creditors on 30th June 2012. Property, machinery and plant at cost 3,90,000, estimated at only 1,50,000. Cash in hand of the receiver 2,70,000. Charged under debentures 4,20,000. Uncalled capital 1,80,000. Deficiency 7,50,000. Liabilities: first debentures 3 lakh, second debenture 6 lakh, unsecured trade payables 4,50,000. What is this balance sheet? I am not able to understand. 6,000 shares of 60 rupees each, 30 paid up, but they are not showing anything in the outer column. And then they say first debenture 3 lakh shown in the amount column, second debenture shown in the amount column, unsecured trade payables shown in the amount column. Assets in a variety way they are showing. Cost is 390, but they are showing estimated value is 1,50,000. Cash in hand of the receiver 2,70,000. Charge under debentures 4,20,000. Uncalled capital. Uncalled capital. Very good. 6,000 into 30, 1,80,000. So total assets which we expect to recover is 6 lakh, whereas total liability we have to settle is 13,50,000. So they are saying there is a deficiency which can come to an extent of 7,50,000. But in reconstruction problem, I don't want this type of a balance sheet. I want a regular balance sheet, no? I want a regular balance sheet with paid up capital, P&L account, debit balance, because I have to remove P&L account, debit balance and all, but it is not shown. So we have to build a normal balance sheet out of the information given. Write down. Balance sheet as on 30th June 2012. The statement given to you was prepared by a debenture holder from his point of view, according to his convenience, according to his like, according to his taste. Now we have to prepare it according to generally accepted accounting principles. Balance sheet on 30th June 2012. Yes, according to your taste, please prepare. Write down. Liabilities rupees, assets rupees. Paid up share capital 1,80,000. Paid up share capital 1,80,000. Very clear. I am saying paid up capital. I am not saying uncalled capital. Uncalled capital is not shown in the books of accounts. Paid up capital 1,80,000. Next, first debentures 3 lakh. Second debenture 6 lakhs. Unsecured trade payables 4,50,000. Paid up share capital, please be quick, build a balance sheet first. Paid up share capital 1,80,000 paid up. First debentures 3 lakh. Second debentures 6 lakhs. Unsecured trade payables 4,50,000. Unsecured trade payables 4,50,000. Liability side total, tell me what is the total of the liability side? 15,30,000. 15,30,000. 15,30,000 is the total of the liability side. Now come to the asset side. Property, machinery and plant. Yet cost. At cost. Balance sheet which awaited cost was plant and machinery at cost 3,90,000. Cash in hand of the receiver 2,70,000. P&L account debit balance balancing figure. P&L account debit balance balancing figure. I keep using the layman's language also sometimes to make you understand that we have to understand it from the point of view of a layman. Who is a layman? According to me, layman is a man who lays bricks on a wall. Okay. P&L account debit balance, how much did you get? Balancing figure? 8 lakh? Over. This is the most important step in the problem. If you have completed the balance sheet, remaining problem is a cakewalk. Okay. But you should not walk in a cake. You should eat a cake. Write down. A holds the first debentures for rupees 3 lakh and second debentures of rupees 3 lakh. So A is a debenture holder who holds first debentures 3 lakh, second debentures 3 lakh. He is also unsecured creditor 90,000. That means he is Bakra. B holds second debentures 3 lakh and is an unsecured trade payable 60,000. Bakra number 2. Next. The following scheme of reconstruction is proposed. A is to cancel 2,10,000 of the total debt owing to him to bring in 30,000 in cash. Bakra again further becoming Bakra. And to take first debentures in cancellation of those already issued to him for rupees 5,10,000 in full satisfaction of his claim. Write down an entry now. First of all, write down when first debentures and second debentures are transferred to A account. Not only first debentures, second debentures, trade payables are also transferred to Mr. A account. What is the entry right? First debentures account that are 3 lakh, second debentures account that are 3 lakh, trade payables account that are 90,000 to Mr. A account. To Mr. A account 6,90,000. 6,90,000. Next, Bakra is bringing some more cash. When A brings some more cash, when A brings cash, bank account that are to A's account 30,000. Bank account that are to A account 30,000. Bank account debtor to Ace account 30,000. Bank account debtor to A account 30,000. Okay. Next. And to take first debentures in cancellation of those already issued to him for 5,10,000 in satisfaction of all his claims. Now he is going to accept debentures worth how much? 5,10,000, and remaining amount is ready to forego. Please tell me first of all, what is the total amount due to Mr. A? 7,20,000. Out of that, he is ready to take only 5,10,000 in the form of first debentures. Remaining amount is ready to forego. Write down. When liability to A is settled by allotment of first debentures. When liability to A is settled by allotment of first debentures. Write down entry. A account debtor 7,20,000. I am settling his account. To first debentures account credit 5,10,000. To first debentures account credit 5,10,000. Remaining things swaha. Capital reduction. You are telling him forget that amount. Assume you have put it in a dhoni. $2,10,000. Did you complete it? Capital reduction 2,10,000 profit. Very good. Next. B is to accept 90,000 in cash in satisfaction of all claims by him. First of all, try to find out what is the amount due to Mr. B. He is holding some debentures and he is holding some trade payables. Write down. When debentures and trade payables are transferred to B account, when debentures and trade payables are transferred to B's account, okay. So how much is due to Mr. B? Please tell me. 3,60,000. Now settle the account. B's account debtor 3,60,000. B's account debtor 3,60,000. To bank 90,000. Remaining things swaha. To capital reduction 2,70,000. B account debtor 3,60,000. To bank 90,000. To capital reduction 2,70,000. Did you all write the entry? Very good. Next, in full settlement of 75% of the claim, unsecured creditors other than A and B agree to accept 4 shares of 7.5 each. Press on button on your calculator. Type 4,50,000. What is that? 4,50,000. Total trade creditors minus Bakra number 1. How much was due to him? 90,000. Minus Bakra number 2. 60,000. How much is left? 3 lakh to the other Bakras. In full settlement of 75% of the claim, unsecured creditors other than A and B agree to accept 4 shares of 7.5 each, fully paid up against their claim for each share of 60. The balance 25% is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. The nominal share capital is to be increased accordingly. What is this? See, In full settlement of 75% of the claim, unsecured creditors other than A and B agreed to accept 4 shares of 7.5 rupees each, fully paid up, against their claim for each share of 60. The balance of 25% is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. Press on button on your calculator. Please tell me, 75% of 3 lakh, how much is it? 2,25,000. If you want to settle this amount in 60 rupee shares, how many shares you have to allot to the unsecured creditor? Please write working note. Please write working note. Working note. Working note. Write down. Amount to be paid to creditors. 3 lakh into 75%, 2,25,000. $2,25,000. Write down. If 60 rupee shares are allotted, if 60 rupee shares are allotted, 3,750 shares would be allotted. Now read the paragraph. What is the paragraph saying? If, listen to me, if creditors are allowed to claim fully paid up shares of 60 rupees each, they can claim how many shares in the company? 3,750 shares they can claim. And again, explain, listen to me carefully. 3 lakh is the amount due to creditors. Out of that they are ready to forego 25%. That means they have to be paid 2,25,000. If they are allowed to claim 60 rupee shares, how many shares can they claim? 3,750 shares they can claim. But see the paragraph what it's saying. In full settlement of 75% of the claim, unsecured creditors other than A and B agreed to accept 4 shares of 7.5 each, fully paid up, against their claim for each share of 60. So, for each share of 60, they are ready to accept only 4 shares of only how much paid? 7.5 each paid. So, Bakra, no, he is making further Bakra. He is becoming further Bakra. Write down below that. Same working note, continue. Creditor agrees to take 4 shares of 7.5 each. Creditor agrees to take 4 shares of 7.5 each against 1 share of 60 rupees each. The creditor agrees to take 4 shares of 7.5 each against 1 share of 60 rupees each. Can you tell me how many shares he is going to now take? Write down. Number of shares will be allotted will be 3,750 into 4. 3,750 into 4. 3,750 into 4. How many shares? 15,000. Paid up value. Next line. Paid up value. 15,000 into 7.5. 1,12,500. He should have taken 2,25,000. If he took 60 rupee shares, he would have got 3,750 shares. He said, I don't want 60 rupee shares. For each share, give me only 4 shares of how much? 7.5 each. Fully paid. That means, what is the value of shares allotted to him? Only 1,12,500. What you wanted to pay him? 2,25,000. That means he has agreed to forego further 1,12,500. Write down the entry. When other trade creditors are settled, write down Unsecured creditors 3 lakh rupees debit. Unsecured creditors 3 lakhs rupees debit. Why 3 lakh? 450 minus 90 minus 60. What was 90? Bakra number A, Bakra number B, 60,000. So unsecured trade creditors account debtor 3 lakh. To capital reduction. 1,12,500. To equity share capital. To equity share capital 1,12,500. Wait. Don't complete the problem. Come back to the paragraph. The balance of 25% is not waived. Is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. So out of 100 rupees, 75% settled by allotting shares. 25% will be carried forward to be settled after 3 years. You write to loan account 75,000. To loan account 75,000. There is only a profit of 1,12,000. Now suppose there was that paragraph was not there, then that would also have been written off. We'll assume it has to be written off and we'll transfer it to capital reduction. Did you understand? 75% is settled by allotting what? Equity shares. We said first of all 60 rupees share. And then we said boss, no 60 rupees share, we'll give you only 4 equity shares of 7.5 each. That means half of the amount he has foregone. Remaining 25% we are going to pay him off after 3 years. The balance of 25% is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. So out of 3 lakh, 25% is not waived. It is going to be taken forward and then settled after 3 years from the date of court's approval. The nominal share capital is to be increased accordingly. Okay, we'll take that step. Increasing of nominal capital is secretarial practice. Job of a company secretary, not the job of a accountant. You are not going to take steps for increase of capital. When you increase authorized capital, you don't pass any entry. When we say capital balance in the balance sheet, we are talking about paid up capital, not about authorized capital, issued capital. Whenever we say capital, we are talking about paid up capital. So that is not accounted for in our books. Nominal capital increase, etc. Uncalled capital is to be called up in full now. How much is uncalled capital? See? On 6,000 shares, 30 rupees is unpaid. No, write down when uncalled capital is received. Bank account debtor. Bank account debtor to share capital account 1,80,000. Now listen to me carefully here. We have now two types of account, two types of shares in our books. Can you tell me what are the types of shares? We have 60 rupee shares fully paid up. We have 7.5 rupee shares fully paid up. It is not partly paid up, boss. What 7.5 rupee shares you are talking about, sir? Just now, to unsecured creditors we have allotted 15,000 shares of 7.5 rupees each. So we have two variety of shares in our books now. 60 rupee shares held by old shareholders and 7.5 rupee shares which are held by the unsecured creditors. Now let us see what the problem is saying. Uncalled capital is to be called up in full and 52.5 rupees per share has to be cancelled now, and thus making the shares of 7.5 each. Now out of all the shares we have to cancel for 52.5. Please tell me how many shares we have of 60 rupees paid up? 6,000 shares. Out of those 6,000 shares, out of 60 rupees we have to now write off how much? 52.5. So that those shares are also now made 7.5 rupee shares. Write down. When paid up share capital is reduced, share capital of 60 rupees each account debtor share capital of 60 rupees each account debtor. Show the calculation there itself. 6,000 into 60. 6,000 into 60. From where? 6,000 for 30 paid up earlier. 30 paid up just now, no boss. Equity share capital of 60 rupees each account debtor, 3,60,000. To capital reduction. 6,000 into 57.5. To capital reduction 6,000 to 57.5. How much? 52.5. 6,000 to 52.5. How much? 3 lakh? 3,15,000. 6,000 into 52.5. 3,15,000. To equity share capital of 7.5 each account credit. So existing 60 rupee shares are now converted into 7.5 rupees each. 52.5 is written off. How much do you get? 3 lakh? 3,15,000 is capital reduction profit, and share capital of 7.5 rupees each is 45,000. Now tell me how much capital reduction profits we have totally? Totally how much we have? Please tell me. 9 lakh? How much is P&L account debit balance we got? Balance sheet. See the refer the balance sheet which we prepared. Remaining amount can be transferred to capital reserve. Write down the entry. When P&L account debit balance is written off. Capital reduction account at 9,07,500 to P&L account 8,70,000 to capital reserve 37,500.